The FTSE 100 may have recovered since the EU referendum, but the FTSE 250, which is often seen as a better reflection of UK prospects, is still lower, having registered its biggest two-day loss since October of 1987 following the Brexit vote. It has recovered slightly. It's still down, though, near on 6%. Well, one of the UK's longest-standing small and medium-sized company managers, Andrea Brough, is with us from Schroders. Thanks very much for joining us. What are you making of what we're seeing in terms of the FTSE 250 at the moment?
Well, if you look at the 250, the reason it's done badly, as you correctly highlighted, was a lot of domestic shares, and the FTSE 100 has got a lot of overseas earners. So much so that now the largest company in the FTSE 100 is British American Tobacco, because virtually all its revenues are in dollars. The dollar's strengthened against sterling. People got very excited, even though it's relatively a low growth sort of business. And they've decided that actually no one's going to be buying any houses, cars, and it's all over for the UK consumer. And it starts infiltrating your thinking. I mean, I cycle to work, and on the way home, I found myself, after that two-day fall, stopping at restaurants, running in, saying, "Leave now. Don't eat any more food, because the world's about to end." And then the local estate agent, 4 months...
Tongue in cheek here, just people who don't know you, Andy. Yeah.
But, 4 months ago, the local estate agent was saying, "Andy, what's going on with this market? It's mental. That house, I think you should buy it. And I've got loads of offers." After Brexit, phones me up. "What's happened to this market? You know, the house is back on the market." And we've had that sort of turbulent period, but I think things are now settling down. People are saying, "Hold on a minute, life goes on. House viewings are still up, people are still buying cars," but it'll take a while for the city to be convinced that that is the case, and they want to see the numbers coming through. So I've spent a lot of time talking to companies since the vote, and they naturally are being cautious. They had one statement ready to go before Brexit. Now they've got another statement. But when you ask them how many people are visiting your house building sites in Cheltenham or wherever, they say hundreds of people. And I think we're just caught up in this sort of bubble here, what is driven by this whole Brexit thing and the impact on the city.
There's also a real split because of what we see in terms of the pound. Great for exports, not so good for imports. We've had Rentokil saying, you know, its profits are going to go up to 243 million from 230. You've got Sports Direct saying it's going to hit their margins adversely. Then you've got Bovis going, it's too early to tell as their shares fall 20-30%.
Yeah, I mean, if you'd said to me, if we vote to leave, the shares are going to sort of fall by 30%, I might have changed my view on the piece of paper. But underneath it all, if you look at it, then we've got unemployment virtually an all-time low. We've got the living wage coming through. So we've got quite a stimulus coming through for consumer spending. And people are saying, right, you know, Carney, is he going to cut interest rates? If he cuts it from a half to a quarter, it's more importantly that we look at some sort of fiscal sort of stimulus. In the past, we had swap your old car for a new one. They might do something around diesel this time. They might extend the help to buy and the other housing things. You know, George Osborne now can do whatever he likes. You know, because if we're going to be leaving the EU, he's not going to be bound by the regulations and the controls over the budget deficits, etc. So he's got a chance to really be quite innovative here, and it'd be interesting to see whether he actually grasps that.
What would you like to see as a fund manager of FTSE 250 companies?
What I'd like to see is I'd like to see him sort of really trying to rebalance the economy a bit, saying that actually, because the exchange rate is in our favour, let's try and actually manufacture more in the UK, sort out the current account deficit. Current account deficit will help because we'll be earning more on our income, on our assets overseas, so that should actually help reduce the deficit, but there's quite a way to go. And it just needs to get people confident. Before this, people were relatively confident. They were in jobs, they were earning money, they could see their minimum wage going up to the living wage at 7% per annum, and there was a reasonable feel-good factor about the country, even despite the England football team, you know, demonstrating their incompetence at an early stage. But now, I think he's got to work out how he restores confidence and gets people talking down the economy, if you like, and actually gets people thinking about, yep, we're open for business, please invest here, and hopefully, you know, we can go forward from there.
Have you had to change your allocation? Are you looking at your strategy because of what we've seen?
Yeah, we are overweight domestic. We've still got quite a lot of overseas earners, which have benefited from the move in the currency in the short term. But overall, we've tended to highlight those companies where effectively demand exceeds supply for the products. You know, what would make me really nervous about the 250 index is if the population of the country started falling. You know, because if you think about it, the population of a country is a bit like the turnover for a company. So the more people we've got here, the more they're going to be spending money, the more places they need to live, more cars they need to drive, more taxes they're going to pay. So that would be a big concern to me. And so I don't think that's going to be a factor in the near term. I expect the population of this country to keep growing, which is completely different to 11 other European countries where the population is in fact falling.
Okay, so bearing that in mind, then what are you looking at the moment?
Well, we stayed with the same thing. You know, we've stayed overweight things like Grainger, Redrow and Bovis. You know, is article in the...
Are you buying more of the likes of Bovis at the moment?
I bought on Friday when they fell. You know, Redrow was down at sort of £2.50, Bovis was down at £6.50, Grainger was under £1.95. Yeah, so but there was very little liquidity in the market. You know, the market makers decided that was it. Let's mark everything down by 30%, try and spook a few sellers, and then actually move the prices back up and make money that way. They got a bit caught, I think, because a lot of people came in and said, right, actually, we're going to be more buying than selling. And you know, the market isn't going to recover overnight, but we are developing quite a good base now. Friday, the 250 was up 2%. It's up sort of 1.5% today. If the stories are true about Theresa May now having a free run, then actually that's going to be good for confidence.
Is there anything you're looking at now that you perhaps weren't looking at before the EU referendum?
Well, we're looking at overseas earners a bit more, but we want to be in those overseas earners where their turnover is going up because they're selling more goods rather than they're just relying on the currency, because that could give you some short-term benefit, but in the long term, they've got to be exposed to a market that's growing. Otherwise, they're never really going to be able to get into that space of delivering good returns to shareholders.
And equally the other way around?
I think equally the other way around. You know, like I said, we're keeping a close eye on the domestics because you know, we might be wrong. You know, we're keeping a close eye on what's happening on the ground. We're spending a lot of time not just talking to companies, but you know, since Brexit, I've been to a couple of property auctions just to check that you know, people are still buying and selling and what sort of prices are going for. And it's that sort of anecdotal evidence we're looking at rather than just relying on what companies are telling us.
And that's always been really key for you, though, hasn't it? It's been really sort of hands-on.
Hands-on, and just talking to private retailers, you know, a bit like Philip Green or whoever, about what they're seeing. Yeah. And Philip said to me, I saw him last week for a cup of tea, and he said he'd had a positive week, and that was down to the weather. But no one ever mentioned that, did they? You know, it was all down to Brexit. Disaster.
OK, we do have to leave it there, but on that note, thank you very much. Andy Brough there from Schroders, looking at the impact on the FTSE 250 following the EU referendum.